And that sound means we are live here on YouTube, and I'm actually going to start my video as well. Hi, Cody. Hi, producer Cody and
I wanted
Coach
to make
Matt.
sure I wasn't the only one sharing.
I'm here, brother. I'm here. I'm excited.
Dungeon.
Matt's in the dungeon.
I'm in the dungeon. I got the war paint on. And I'm getting it. And I want you to picture this, guys. William Wallace with the blue paint, and I'm getting ready for the Fed. That's what I'm getting ready for.
Yeah. What you need to do,
I'm going through my process.
You got to slaughter a pig and then like make it with pig's blood all through your face and all that kind of stuff.
You don't want to know the sacrifices I'm going to be doing to the fiscally conservative hawks out there to see if we can get some sanity in our central banks around the world, but it does not look like that's going to happen. Mario Draghi, wow.
I'm falling to the belief that no one in this world other than traders have a hawkish view.
I don't think most traders do. I think most traders, like, they would just want zero interest rates so they can buy for the rest of their life. But
yeah,
you know, I mean, it's just Mario Draghi woke up today and he's like, hold my beer, watch this. All you central banks, you don't know what dovish is. I've been saying this about Draghi for years. He's never seen a rate hike that he ever wanted. And he woke up this morning early in over there in Frankfurt, Germany. He just said, you know what? Bank of Japan, you think stagflation is a problem? America, you think economic recessions are a problem? I'm going to print everything and buy everything, and I'm going to have my full weight of the European military might, which is nothing, interest rates, and it's just dovish. That is the word of the day, dove.
Well,
you know, I watch him come out. I think we're going to peg the euro to Bitcoin.
Well, Matt did call for the Greece economy to move to Bitcoin years ago, and they should have done it.
I did in 2015.
Yeah.
I can't remember. It might have been October of 15, but Greece was going through another austerity type problem, and Germany was yelling at them.
Oh, I remember when you wrote an entire blog about it, right?
I did. I wrote a letter to the finance minister from Greece, and I said, you need to get rid of the euro, default on your debt, embrace Bitcoin as your national currency, and Greece would be one of the richest countries in the world right now if they would have done that.
Well, yeah, back then, what was it, like $100 Bitcoin?
I think when I wrote it,
maybe $200. I can't remember.
No, it was more. It was more. It was
$600.
About 600.
Cheap. Yeah,
it was about $600 at the time.
Well, I mean, the point was they had a failed economy, a failed currency system, and you were moving towards something that was new tech and that people were embracing. You know,
and that's what my point was that your currency that you've embraced for the last 20 years have failed, and the DROC before that had failed multiple different times. And why don't you embrace something different? Try change.
That's kind of what I was trying to get at in this past week's Forex report, is that the intrinsic value of any currency is the output of the country that it's backed by. The belief in that currency is what gives it value. If no one believes in, what Greece is using as their currency at the time, and more belief was going into Bitcoin, it would make sense that it would be a stronger currency. And they should have.
I agree. I mean, but obviously they did not.
I would make the argument that there is zero intrinsic value in any paper-based currency.
I would argue with you that it comes down to the GDP of the economy itself. Now, whether or not that changes or adjusts is the extrinsic value based on inflation and other factors comparatively to
but extrinsic value is real value.
Yes, so real value. So, I mean, and you could say, like, okay, it's the piece of paper. What value is it? Okay, you can burn it and get a little heat. Yes. But if you try to say, what's the intrinsic value of the U.S. economy? There's plenty of that there. So I would make the argument that the note holds, at least in part, some intrinsic value from the economy that it's backed by.
Well, I will tell you 583 currency. I disagree with you.
Well, yes, every fiat currency typically does die. And as of right now, Draghi's trying his best to kill the euro.
Oh, he is. He's having a moment. There's no doubt about that.
Like your Twitter post. He's trying to get it to hell as quickly as possible.
I thought that made a lot of sense for that to be the response for Draghi on Twitter. I thought I'll just tell you guys what I wrote down in my own notes as I was preparing for the halftime report today.
Okay.
In the news, I said, Draghi suggested ECB are ready to deploy additional stimulus to kickstart inflation and drive economic stagflation to the depths of hell. That was the first thing I wrote in my notes. So I put it on Twitter.
I like it. I mean, a lot of people could argue actually that it's just what Rickards, wrote about in Currency Wars years ago. They're going to keep killing currency until they're all dead. A lot of what he has said is continuing to come to fruition. He's right.
He's not wrong. The idea of the race to the bottom of your currency, is a true thing. It really is.
It's been going. It's guys. What we started in 2009 was the largest currency war that's ever existed, where they're basically a race to the bottom. And I know we make fun of Draghi, and we make fun of Gerardo from Japan, and we make fun of all these central banks, but it was the United States Central Bank that started this process.
Yeah, it's true. European stocks are up big here today, about 2%. The DAX, the Euro Stoxx 50, the Nikkei is only up 0.5%. European companies have been underperforming the market for a long time. And obviously, U.S. companies are now following suit here, Matt, and they're up as well. S&P 500 is up 1%. On the intraday here, you've got a nice little retracement. Break down the technical action, if you would, on the S&P. You and I were having a discussion before we started the halftime report. And by the way, welcome out, everybody. It's always good to come and spend an hour with you guys on a daily basis talking markets. If you are new to our channel, always subscribe and click the bell. And whenever you come in here for the very first time, give us that like and let everybody else out there know that you are watching the halftime report at Tackle Trading's YouTube channel. S&P 500, Matt, what's your read?
Read, well, what we were talking about with Draghi, I mean, guys, this has real impact to the marketplace. Here's the European market open right here. This is when Draghi gave his speech, and as you can see, the S&P 500 just sitting here in neutrality, as we've seen that high base type forming in the marketplace over the last week and a half. As you see this consolidation hitting its head at 29, and then on the overnight action, right about it was about 3 o'clock Eastern, 4 o'clock in the morning Eastern. So it's mid-morning in Europe. Draghi gives his speech, and you see the market really kind of break out of that 2,900 level right here on a really good, nice little bullish candle. And then it just fades throughout the rest of the European market midday. And then coming in right here, Tim, President Trump on Twitter. And this is the other news of the day that was extremely positive for the actual stock market. Trump indicated on Twitter that he will be meeting with Chinese President Xi Jinping at the G20 summit next week, and that was not necessarily, written in stone, and so that's gave the market a little bit of hope that we're going to see some type of positive news coming out on the Chinese-U.S. trade war. And when you're looking at those stocks that have been impacted, the Caterpillars, the Deeres of the world, the semiconductor companies, you name it, they've done really, really, really well today.
Yeah, there's been quite a few movers. In fact, AMD is our stock of the week. Bring that up. Every Tuesday on our Instagram channels and all of that, we actually put a stock out there. And I picked this company for many different reasons. Number one, Matt, I like the depth of the retracement. I like the old resistance, new support. We talked about it yesterday, and it still is below what our pre-planned trigger was on Friday. You could have aggressively triggered into this morning, Matt, on the intraday, or you could be waiting for a trigger at some other location, preferably maybe even above 3105. Give me a look here on AMD if you would. Break this one down.
I think that would have been a very aggressive trigger above the previous day's high here. I mean, you had a lot of momentum coming down to the downside, and anybody putting in their orders overnight, they didn't know what Mario Draghi was going to say last night at 4 o'clock in the morning on the East. They didn't know President Trump was going to meet with President Xi Jinping out of China when he announced that at 7:30 a.m. Eastern Standard Time on this morning. So I think that would have been a really, really aggressive entry. When you're looking at this from a price perspective, you see this nice little retracement coming back down into that 30 type handle. You see a little bit of double bottom on the overnight, upward movement in price. And wherever you draw this trend line, excuse me, let me get out Dropbox. Whenever you draw a trend line and you're connecting, say, the support or resistance levels to the downside, wherever that trend line is, you've broken through that trend line. And so when you're coming back to the daily chart, just go through your process: bullish uptrend pattern, bullish retracement, identify support right here at 30. You're also on the rising 20-day moving average, previous levels of resistance over here at 29. So you have a tremendous amount of support here between 29 and $30. You got some positive news coming out on the Chinese trade war. You get this upward movement in price. Now the question is, where do you trigger into? I think the aggressive trader, Tim, they're looking at this from an intraday perspective, and they're seeing this intraday retracement coming back down into these old levels of resistance, old levels of support from an intraday perspective, and they're looking to get in on that intraday pullback. Whereas the conservative trader, they're focusing on this daily chart. They're saying, okay, let me get a close above that 30 handle, and then I look at that nice little intraday right there at 31. Maybe I trigger in above 31, Tim. And when you're looking at that trigger above 31, that's just that kind of high right there. It also coincides with the high of the day. So from the aggressive trader, they're looking to get in from the intraday pullback. The conservative trader is looking to get back in above 31.
Yeah, and I do like both of those kind of triggers and entry points, Matt. For me, I think if you're doing it this morning, you probably had to be a day trader that was catching the open, things like that. And it's nothing wrong with being more conservative if you're a swing trader. Our original plan trigger was 31.05, which I think is probably just 10% of the ATR above that trigger point at $31. I love the company. It is one of the most traded, most liquid companies. And one thing I love about it, Matt, bring up the option chain if you would real quick.
Well, the 3105 was just 5 cents above 31, and then if you understand the step system, and Module 3 was released just this week, and Module 3 is all about this exact same pattern that we're looking at here on AMD. That 3105 is not where you put the order. That 3105 is where you put your 10% of the ATR or the 25% of the ATR or whatever your personal rule is. So I don't want people to get confused when you're seeing those scanner reports. You see 3105. We're not conducting the 10% of the ATR. That is the level you're triggering and above.
Right. And then the trader has to set that buy stop order or the buy stop limit or the buy contingent based on an option,
right? There's too many variables in that. Yeah. And so every trader's a little different. My personal rule is I want to trigger in 10% of the ATR above that trigger price. But there's other traders. There's more conservative traders. We're identifying those key levels of intraday support and resistance zones that we want to trigger above. But it's the individual trader's responsibility to apply their rule for that.
Yeah, and one of the things I love about AMD, I trade a lot of options myself. And if we click the trade tab real quick, Matt, we're going to come right back to the charts and talk about a bunch of different companies. But 61 million shares traded today. And if you bring up any option chain, it is one of the most liquid, most traded option chains on the planet. There's no doubt about it. In fact, the open interest is always sky high. 12,000 contracts open interest at the money at the 30 strike.
It's a stock everybody likes trading, Tim. I would say out of all the semiconductor stocks, this is the stock that traders most like to trade. I think they most like to invest in Intel, but this one they most like to trade.
Yeah. All right. Back to the charts, if you would. There's so many different companies I want to talk about here today. S&P, Dow, NASDAQ, and even all the way in between. Take a look at Boeing, if you would. Obviously a Dow component and an S&P 500 component. But Matt, this one grabbed my attention early on in the day. It actually broke above 360, which was the resistance point in a falling downtrend. And there was some mixed technical signals in there to begin with, but now high volume, high pressure breaking out. Old support now has failed. We have not closed there yet, Matt, but a lot of good signs on the chart as well as good news for this company today as well.
The amount of things that would have to happen for this not to close above resistance, above that breakout channel is insane. Yeah. It's going to do it. I mean, this is not just a technical move or a market move on Boeing. This is the Paris Air Show, and there's orders coming in and there's news coming out, and the news, and this is, I think we're on day 2 now. Day 1, Boeing had 0 orders. Airbus had I think like 150 different orders. Boeing really kind of wanted to focus on name recognition and saving face and kind of rebranding their image coming out of the 737 Supermax, just atrocity over the course of the last year, and especially the last 3, 4, 5 months. So when you're looking at this on day 2, though, I forget who the company was, but they came in with 200 orders on Boeing planes, including many orders, up to like $24 billion worth of orders of that 737 Supermax 8 plane as well. And so you're talking about a technical movement where you're seeing a W formation on the bottom side. You have a clear area of resistance here at 360, 361. You're breaking out of that on strong volume. If you can see the volume right here, you're breaking out of that on strong volume. And when you're looking at this from a market perspective and you see the market make that movement from the overnight action, and then look what's happening, it's showing a little bit of a bullish retracement from the intraday, which is very, very normal. But when you're looking at Boeing here and you're seeing Boeing break out, but if you drop this down into that 30-minute chart, there's no sign of weakness here, bro.
No, not at all.
Strength. And so, I've been very, very cautious with Boeing. My opinion has been very well known within our community. It's a company I absolutely love, but I have not loved how they've handled the transparency of the Supermax situation. But you're starting to see a little bit of positive news, and it might come back on the this is tradable at this point.
Well, yeah, and the thing about it is they're doing exactly what we said they were going to do 3 months ago, which they're rebranding that 737 MAX. It was Korean Air, by the way, that ordered those planes. And, capitalism trudges on, Matt.
British Airways, the parent company of British Airways, the one who I believe ordered the 200 planes, but that wasn't just Supermax 8 planes. That was a lot of different planes.
Yeah, they're going to keep selling planes and they're going to get preferred treatment as long as they can come back and gain the public's trust. I think the stock will go back up over time. It's going back up right now.
Positive news coming out of the Paris Air Show today. Boeing's obviously been a target in the Chinese trade war as well. And so you have positive news coming out of Europe with Boeing, and you have positive news coming out of the U.S. and China with the trade war with Boeing today. And let's see if they can have some carry through. But this is, if you're just focusing on the price action, this is a bearish downtrend that formed a reversal pattern called the W. It's breaking out of that reversal pattern with a very good candle today. If you're just looking at that technically, you got to like what you see.
Yeah. Quick look at the Dow Jones Industrial Average. Let's keep working through the markets one step at a time. There's a lot of companies I'm going to just be talking about as we go through these. There's no doubt about it. YM contract up 1.3%, Matt. You've got resistance at 26.7 up here. We're going into a Fed meeting, and obviously there's a lot of anticipation for this meeting. The ECB came out and kind of beat Jerome Powell to the punch. Draghi kind of one-upped him here, but the market is now moving up and higher. What's your anticipation on the Dow? What's your read on this chart real quick?
It's amazing. They're playing who's the biggest dove. That's the game. Who's the biggest dove? Hey, why would central banks want to be known as who's the biggest dove? It's amazing to me.
It's a race to the bottom of currency systems.
I think dove is too nice of a name for them. They need to be called pigeons or something, because no one likes pigeons.
What's that? Yeah. What's that terrible bird that nobody cared if it got shot in Emory County growing up? A magpie. Let's call them magpies.
Or those the crackle birds, the black ones with the beady eyes.
We're probably
magpies are smart, by the way. I remember they used to talk to each other.
On this.
In my old neighborhood in West Jordan, Utah, before I moved into this house, we used to have tons of magpies around us, and they would actually talk to each other about where the cats were. I had this old cat, Mittens, who, poor thing, he died getting into some radiator fluid years ago. Broke my heart there a little bit. Have never owned a cat again, but they used to talk about where he is. They would squawk to each other. They are smart. I don't think they're dumb birds, by the way.
Oh no, they're definitely smart birds. It doesn't mean we like them.
I'm still calling the doves magpies from now on.
Magpies.
I'm sorry about your cat.
Well, I'm going to tell you right now, Prime Minister Abe and Kuroda and all of them, they're all magpies. There's no doubt about it, Matt. And they're artificially going to kill these currencies. It is what it is. And really what it comes down to, Matt, is they have a dual mandate. You mentioned it yesterday. And part of that mandate is to keep inflation at 2-3%. We can argue with it. We can think it's crazy. We can want to literally just bitch about it every single day. But that's what they're going to keep doing. And when inflation and the European economic indicators come down, Draghi's like, screw it. Let's just go print more money. Let's extend this program. I remember when that program was announced in 2013, and it was supposed to just be a short-term fix, Matt.
It was 6 months.
Now, here we are 6 years later, and they're extending it again. It's crazy.
What did I say when it was announced in 2013, Tim? I said it's not going to be 6 months. It's not. This is something that the banks around the world are embracing. And guys, it breaks my heart to admit this, but it's something that is going to be the new norm.
Yeah.
I like what Blake said in the chat. They should be ostriches. They're just hiding their heads in the sand.
Ostrich. I like that.
Yeah.
I like that.
Oh, ostriches is not a bad call
I need
there.
Team Tackle to come through and to tweet me on Twitter a GIF of the new bird that we're going to call the doves.
Aren't they vultures? Aren't they scavengers that just pick at the dead bodies of economic theorists that have been around for
They
300
could be
years?
vultures.
They
That might
could be vultures. I don't know. I'm gonna have to think about this.
I know Blake can get on Twitter. Somebody entertain me on
See,
Twitter.
the only reason they can't be vultures is that vultures don't actively kill things. These things, they're actually actively trying to kill their currencies.
Yeah.
All right. Y'all are taking it further than I was taking it.
Hey, you give me a metaphor, I'm going to run with it.
I'm looking across the indexes right now as we speak, Matt. Dow up 1.3%, S&P up 1.08, NASDAQ up 1.62. You know, in the Dow Jones Industrial, there's a lot of companies that are grabbing my attention. Boeing was the number one. There's no doubt about it. As I look at the top of the charts performance-wise, Apple Computer is up big. Boeing was the number one. Intel's up big. Nike's up big. Caterpillar.
Take a look at these very quickly. Apple breaking out a high base, very similar to the market. Tough trigger unless you get it close above 200. In my opinion, you named Caterpillar as well. Caterpillar perhaps breaking out of a reversal as well, getting above 130. That's going to be interesting. Another one that was in the news based on the Chinese news, John Deere breaking out of this old level of resistance support at 155. That's good news for John Deere. I mean, if we're going to see positive news, and I'm not there yet, guys. I mean, just because Trump says it on Twitter doesn't mean it's true. So, but if we're going to see positive headwinds coming out of China and the U.S. trade war, you're going to see some industrial stocks do fairly decent in that environment.
Well, Matt, the only reason I would say that the chances are probably good on their meeting is because you can look up at the past times they've met. There's been positive outcomes of it. Things like delaying the tariffs, them actually starting to sit down and start the trade talks versus just, back and forth banter. Every time Xi and Trump have actually talked to each other, things have gone better than when it's their negotiating teams going at each other or just rhetoric on either side.
You would think so, because you wouldn't think that the two presidents of the two largest economies in the world would actually meet and have discussions unless there's been preliminary work.
Mm-hmm.
Right?
True. Yes.
I mean, Lighthouser and Mnuchin and the Chinese delegation, there has to be some preliminary work being done for those two to meet in the first place. And that's one of the reasons why you see positive news coming out of that, is because there's been a lot of work done to lay the groundwork for that. And so I hope that we find a solution to the Chinese-US
and also,
trade. No doubt about that.
To add to the vanity of both our president and Xi, they both want to seem like the ones that are making it happen to their country. They both need to be the hero of their. And that was one of the things that I thought was dumb whenever the headlines were coming out. The Chinese were saying one of their biggest factors in making a deal is they don't want to look like they're losing face at all. And it's like, seriously, like that's your line of making a trade deal.
Well, there's some pride.
We don't want to look
factors, right?
Mm-hmm.
I mean, there's some pride factors, and that's to be understood both from China and from the U.S. We're talking about two very prideful nations, and understandably so. Look what China's done in the last 35 years to improve their economic standing in the world. And I mean, the U.S. you don't have to even talk about the U.S. because we all know what the U.S. has done in the last 35 years. So we're talking about two major economic giants, two very prideful nations, and rightly so. And nobody wants to have egg on their face here. And so I totally understand it. And I just hope that we do see some positive news coming out of the Chinese trade war, because there's some nasty economics coming at us in the next year and a half, 2 years, guys. I mean, there's a reason that Mario Draghi said what he did today, and there's a reason that Corrado has done it. And by the way, we haven't even talked about Australia. There's a reason the Royal Bank of Australia literally today announced that they're going to start cutting rates. There's a reason that they're going to remove the patience language from the equation in tomorrow's Fed statement, is because we're seeing some nasty economics coming down the road. And if we can remove one of the major variables in the Chinese-US trade war, that's going to be a very positive thing for everybody, in my opinion.
It's going to be interesting as we move forward, obviously.
One more thing when it comes to the Fed and rates, and of course we'll probably talk about it again tomorrow. But just so initially, when they're raising rates and they're working towards, and this is what they stated their goal was, meeting after meeting after meeting, they kept stating their goal was to find a rate of neutrality that was a rate that would not hinder economic growth, but it would also control inflation. And as soon as we get to a point, right now it's 2.5%, that we stop raising rates, and it seems to be a good neutral point. Not 3 months after we get there, everyone's hollering for cuts. We found neutrality, and that's what we found, and that's what our goal was. Why on earth would we be looking to cut and not just maintain? And I know a lot of this is rhetorical. I just want to kind of talk about it because
young Padawan, let me explain something very quickly. Okay, you're going through your first experience of the Fed moving the goalpost. Okay, this is what they do. Normalization of interest rates is not 2.5%, and anybody who makes that
and it shouldn't be. But my point was, if this is what they say normal is, then why are we backing up? It's like, wait, hang on now.
Normalization is the inflationary rate plus 2%. So if you're looking at 2.3% inflation, normalization somewhere around 4 to 4.5%. And so what the Fed is doing is they're moving the goalposts because they know if they raise to 4.5%, this market, who is basically a drug addict on quantitative easing and free money, it will literally tank the market. And so they're moving the goalpost, and it's not something that I like, but we better
that's what I'm getting at. So I understand.
I'm going to be very correct.
They could not move it up.
I'm going to be very clear here. 2.5% is the new norm for the rest of our lives, guys. At least until the dollar
at the Fed level.
I hope you are wrong. I hope you are wrong on that.
Hope isn't a strategy, young man. And
of course, I know hope's not a strategy. As a matter of fact, I'm getting annoyed with the headlines using the word hope,
Cody,
because that's the top one today.
Look at the trend. Look at the lows and the highs in the 80s. Look at the lows and the highs in the 90s. Look at the lows and the highs in the 2000s. Look at the lows and the highs in the 2010s. And for the last 4 decades, the highs have gotten lower and the lows have gotten lower. You're basically in a massive bearish downtrend from interest rates over the course of the last 40 years. So when they announced 2.5 at the top of the market is the new norm, you better take them for God's word, because that's what it is.
Yeah.
So I see the trend, and I've looked at it, and I understand. It's just I don't want it.
No, why do you think I lose my mind all the time?
Being hawkish. I want them to stop this stuff that's destroying the world. It's just kicking the can down the road, saying, tomorrow's generation can worry about that. I don't have to worry about it. I
get it. Your want. Just wait till you have kids, Cody, and then you get real pissed off.
Mm-hmm. Here's the bottom line. The Fed doesn't care at all, and they're going to continue to lower rates. And part of it, they can't not with the way that the ECB did today. Part of this thing with the ECB doing their asset purchasing program, it triggers the market knowing, hey, the Fed's got to follow suit. Because if everybody else is in a race to the bottom and they're going to kill all their currencies and keep interest rates at zero or here or there, what is the Federal Reserve going to do?
I get that. Let me make an argument. Let's help them. Let's raise our interest rate, have the entire world have the thirst for the US dollar, and let's drive the euro to the point where it dies, a la circa George Soros in 1992 with the Great British Pound.
Let's do it.
Now, go beat George Soros for a day, and you get this job done.
But here's the problem with that, Matt, and I'll lay it out very simply. On usdebtclock.org, we know how many trillions of dollars are in mortgage debt, and people do not save money. If you have the dollar rally aggressively, if it goes up 10, 15%, inflation's going to get hurt, and then people won't be able to pay their bills because their actual mortgages will come down in value. This whole thing is just fake economics, making people feel like they're building net worth. It is.
If we raise interest rates, inflation is going to go up, so they can't afford it.
Inflation will go down. That's my point. If the dollar goes up and interest rates go up, and if they did actually fight the rest of the world here, it would actually create a disinflation and bring inflation rates down, and they don't like that.
What is U.S. debt? It's U.S. debt clock.
Yeah, U.S. debt clock. I hate that website. It gives me anxiety.
There you go. Get your anxiety.
Thank you. Thank you, Matt.
I mean, look at that number right there. The U.S. Mortgage debt held $15.6 trillion in mortgage debt, Matt. Student loan debt, $1.6 trillion. Credit card debt, $1 trillion. People are in debt up to their eyeballs and actually not saving money. And part of the reason why they're comfortable doing it and why consumer confidence stays so high is this idea that their house is going to go up 5-8% every year. And the only way that it can do that is with fake money creation from the Fed and forcing the inflationary storyline. I mean, it's where they are.
So the answer to the house of cards is continue to build the house of cards. I understand it. I get
just throw more cards on it. If a piece falls down, just put more cards on top of the piece that fell down. We'll end up with a big stack eventually, guys. Just listen. If it falls down, just build more. Now our foundation is stronger that way. This is all sarcasm, by the way.
I think we got that, Cody.
All right.
But all I'm going to say is this. We can bitch and moan until the cows come home, guys.
Yep.
But the reality is 2.5 is the new norm. The reality is we're going to be going through a lower interest rate environment over the next year to 2 years. And we know that in a lower interest rate environment, when the entire world is going to a lower interest rate environment, there's a reason for that. And that reason is because they see some type of nasty economic headwinds coming at us. And we have to accept that as the economic reality. And we're going to trade the price action. In the short term, hold on, in the short term, when you have this type of news coming out, in the short term, you see price appreciation, right?
Mm-hmm. Yeah.
You see that euphoria take over that. We're going to have a lower interest rate. I get to refinance my mortgage for a lower cost. I get to borrow money to purchase assets at a lower cost. I get to borrow money to expand my business at a lower cost. I get to finance debt at a lower cost. All these things, I get it in the short term. But in the long term, the very reason why every central bank around the world for the last 6 months has been screaming about we're going dovish is because they're seeing economic stagnation start setting forth in the Eurozone. They're seeing negative GDP in the Asian zones, and we're seeing slowing growth in the US. So that's the reason we have to accept that.
Correct. I agree. And you got to trade the price action.
On that point, because you said, why don't we just raise our rates and help take the euro down? So what I was getting at when I was talking about neutrality is with everyone else lowering, if we stuck to just a neutral, don't change, just stick where we are and literally hold this as not only the new norm, but just like this is not our ceiling, but our floor, then as other economies start dropping, won't the U.S. economy maintain, long term, but long term, it would end up being the big boy on top afterwards.
Dollar goes up, U.S. economy would go down in that situation.
I think we have to accept the fact that we're not going to get a rational Fed policy that's going to make us happy anytime soon, and we have to trade the price action. Bottom line, I mean, that's trading, isn't it? You can't, because they don't care. They don't really care, and they're going to continue to drop it, and they're not going to peg the rate. Cody, I'm going to tell you that right now.
I know. I'm not saying they peg the rates, but yeah, we need some sort of rationale plan behind this and not just shoot from the hip, make everyone happy, kumbaya scenario. They're not even, we need a new name for them. They're not doves. It needs to be a bird. They're dodo birds, what they are. They're the dodo birds from Ice Age is what they are.
Stocks. We'll keep talking about this as we go. I want to look at some companies though. Give me Facebook if you would, Matt, FB. And their cryptocurrency is going to be released and there's a lot of anticipation for it. Facebook is now running. It's pulling back on the intraday here. The gap out was overnight and it has completely given up all of those gains, Matt. Daily chart is mixed, but they have been in the news day over day over day over day. And that's not a good candle for that company right there.
No, Facebook announces their new cryptocurrency by the name of Libra. Let's have the halftime crew. Let me know what you think about the name Libra for Facebook's new cryptocurrency. It is to be released in 2020, and the news is basically it's a way for people to shift money around the globe and blah 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 blah, like every cryptocurrency has said for the last 10 years.
Yeah. In fact, it's not the only one, though. There were other cryptos in the news today. Ripple actually bought a stake in MGI. MoneyGram is a transferring service, and Ripple is benefiting from that here today. Take a look at the stock, MGI. This is a public company, not the crypto itself. And it's up big, gapped out on the news that Ripple's taken a stake in the company. Small company, but it was noteworthy, in my opinion. Beyond Meat, Matt, has had an incredible day. I don't know why we don't just start the day every day with this company.
Because there's no way I would do that.
$200 gap out, backfill into 160. It had a 20% intraday range. Obviously interesting from a just a perspective of price action alone, Matt. I don't know what's driving the day-by-day price action on this thing. Besides, I don't think it's just amateurs buying. I think there's something going on with black pools. Maybe they're taking money from the amateurs.
That was algorithms.
Yeah.
That's what that was. You have this buy coming in from the overnight action. You have orders coming in across every broker, buy. It's just going to go up forever, comes out, and you're telling me that was just traders like you and I shorting when the market's doing this? No, of course not. That's all algorithms driving the price on the intraday.
Yeah. Yeah, incredible price action to say the least. There's no doubt about it. As I'm looking at a company like that, Matt, it's complete stay away from me. I mean, you can't, you were saying, how could you hold it overnight? And I said, how can you hold it for 5 minutes? I mean, this has every feeling of flash crash to me, Matt, that it could completely unwind at any moment, one way or the other, melt up, melt down. Who knows? I mean, this is not normal. And when you're getting into not normal, the option volatilities are going to be crazy. The algos are all in there. Trade with caution, if anything, right?
The amazing thing is from the close of yesterday to the current price today, it's down less than 0.5%.
Yeah.
But looking at the overnight action, it's just absolutely insane.
Yeah. Moving through the markets one step at a time. Give me a look back on that NASDAQ 100. I want to look at the NQ contract here, Matt. This is an interesting breakout. In fact, you're breaking the pivot right here, and you're seeing an intraday pullback. We're going to be talking on a Delta Tuesday. In the chat, everybody type in Delta Tuesday. One thing we do on our halftime report is we have a theme day by day, and we always do a Delta concept. We're going to do an intraday chart read against a daily chart read and kind of do some multiple time frame analysis. NQ contract fading now on the intraday, Matt. What's your read?
Well, I mean, from that intraday perspective, Tim, I mean, this is what you want to see. You want to see that pullback coming down. You want to see the consolidation, and then you want to see it really kind of confirm, very similar to what we do on daily charts. You want to see it confirm above those previous candles you're seeing right there, and then it breaks down from an intraday perspective. So, from if you're looking at the NASDAQ, and I saw this on the S&P when Cody was talking, I mean, literally within 5 seconds, the S&P was down 5 points. You just saw it break that little intraday support level, and now we're trying to find where that next level of support is going to be. So on the daily action, you're looking at a breakout here. You can't deny that. That's a breakout. It's most likely, I mean, the close is going to be very important today. And you asked me a question earlier in the pre-production show, Matt, can this be sustained in the face of the Fed tomorrow? And obviously it can, but are you going to see aggressive buying coming out of it? That's why I want to see the close today. But we're seeing a little bit of weakness from an intraday with this failed break, with this failed retracement so far.
Right at the open, it took off and just ran. There are a lot of companies that are grabbing my attention, Matt, but Alibaba is one of them. We're going to run through a bunch of tech names because I think this is where the storylines are. Obviously not a chart you can buy yet, but the biggest company that I track out of China in the tech sector at Baba here, breaking above a pivot point up 4.5%. That's noteworthy in my opinion. Why is the Chinese stocks getting so much of a bid here, Matt, in terms of buying action off of European news? Is just the idea that the trade war is going to get settled?
It wasn't just the European news that was kind of on the overnight. It was really Trump signaling that he's going to be meeting with Chinese president. Mm-hmm. And we've seen this. Anytime you've had positive trade news come out of the U.S. or China, you see these tech stocks that have been pushed down like Baba, you see them kind of going back up. This is a pattern that we talked about in the scouting report quite a bit with Mark. And Mark ran some data in terms of the bearish retracement. And basically what his data read was when it gets above the 20-day moving average, the success rate of these retracements just become, so low from a confirmation perspective. If it stays underneath the 20-day moving average, literally the batting average goes to 55 to 60%. And so when I'm seeing these deep little retracements to get back up above that 20-day moving average, now I'm a little bit have some hesitation here with that. But also, I mean, this movement you saw today, it blew up a lot of good bearish retracements though, Tim. I mean, 3M, for example, good little bearish retracement, same situation, gets above the 20-day moving average, and now you're seeing that kind of get blown up here. So I saw that quite a bit across the board with a lot of these bearish retracements that had been really kind of forming, that they kind of broke out on that positive news coming out of China.
Look at some of these reversal patterns out of these Chinese companies. It's not just Bob. LFC is a $100 billion life insurance company out of China, and they've got a reversal W going on right here, Matt, at the bottom. PTR, PetroChina, oil company out of China, a little bit of a reversal pattern above a pivot. I'm seeing it. Baidu. Baidu's got an inverted head and shoulders here. Reversal characteristics off the bottom are very aggressive. Obviously, it's not exactly a tradable signal.
Not one of those would I want to trade, though.
Me neither. But I'm seeing it in the pivots. And look at FXI. Could this, a break above 42, put this trend back into the upside, or is there still just too much weakness?
A break above 42 is the S&P breaking above the all-time high, and I'd rather buy the S&P.
Yeah, me too. A lot of these Chinese names are grabbing the headlines here today, but I still think there's strength in U.S. companies. Moving on to some of the NASDAQ companies, Amazon. I talked about this breakout on Amazon at 1900, and a little intraday pulling back here. I did not pull the trigger, Matt. I've been watching it. I did not talk myself into a trade here.
And I'm going to keep on telling you not to do it.
I do like that intraday uptrend, though. I got to tell you. It is looking like it wants to run. Obviously, in front of the Fed, that's not a good time for you to take a trade on a big company like Amazon or companies that you're going to play directionally. Amazon is one of them. We talked about Apple. We talked about Facebook. Look at Google. Google was one of the most bearish setups that I had on my list, and now it broke above the 20, broke above 1100.
Yeah, it never triggered for me, but it did. And again, we talked about the 20-day moving average just a second ago in these retracements. You see Google coming back up into that 20-day moving average that consolidates. Never really gave us the trigger we were looking for here, but then it gaps out on that positive news. And to me, I mean, that's not a strong candle, but you are up 1.37% when the market's up less than that. So you are seeing a little bit of relative strength, even though you haven't had any follow through from the daily action.
Yeah, Lane has a request here, and hashtag.
I was going to say, Lane, that's not too bad on Tesla.
I like that idea there, Lane.
Hitting the top of the channel on the 50, although you got to watch what it does with that 50.
It has mixed technicals in one regard. You do have, you're above the 20, you're below the 50. I would personally call this one bearish, Matt. Some people might stay away, though. They might say, listen, until I get confirmation below that pivot from 4 days ago, I don't know where the trigger would be on this one. I have it on a bear watch list. I'm going to keep it on a bear watch list, and I'm going to be looking for opportunities to the downside. What say you, Matt?
I'm with you here. Lane, that's a good catch on the 50 here. You got a very consistent bearish downtrend, as you can see with the trend line I drew. It's also very consistent on that 50-day moving average. In my opinion, a lot more consistent than on the 20-day moving average. You look at that 50-day moving average here, and here. You got a lot of evidence there. Tough trigger with the little bit of a pivot down here. I still like it underneath 200, to be perfectly blunt with you. Get me underneath that 20-day moving average. Get me underneath that 208 pivot right there. But I could definitely understand somebody taking an aggressive stab here at the 50. It's cheap risk. Put a stop loss right above the high of the day. You're right above the trend line. You're right above the 50-day moving average. So I see it. Cheap risk. I mean, if I was looking at this from an intraday perspective, kind of looking at the triggers that we could find here, a little bit of trigger underneath that 223, maybe underneath 220. That big one's right here, though. Let me get my drawing tool, actually. That old pivot there, all that consolidation right here, that'd be a good trigger underneath 210. So if I'm looking at this, I'm triggering either underneath this 210 mark or underneath the 200 mark. I think it's aggressive in
Matt,
between 225 and 210.
This is Delta Tuesday, but do like theta on something like this that I would easily sell a credit spread up there at 280.
Yeah, when in
because
doubt.
then exactly you can play it directionally with a positive trade on it, and that's when I see that chart and I see the mixed signals that it has, my instinct goes to credit spread.
Yeah.
Well, if I got a 15 delta contract here on a credit spread, yeah, I mean, you're getting 15 delta, 10 ROI. It'd be about a 70 on the Royd.
Royd would be fine on a bear call. By the way, bear call Royds are always a little bit lower than bull put Royds, but I would probably still wait till Thursday for me personally, guys. In front of the Fed, I do want to add some theta on Thursday post-Fed because the volatility will also fade out, but that just would be me. I would wait to add bear calls on Thursday instead of today or tomorrow morning.
Yeah, just wait till post-Fed.
Yeah.
But I don't mind Adam's suggestion here. Looks like a Jesse Livermore opportunity. Partial position now, scale in, take a small stab at it, and if it does get confirmation, additional confirmation underneath 220 or 210 or even 200, you add to the position. I could definitely understand that.
Yeah. Quick note on Adobe. They have earnings, Matt, coming up after the bell, I believe. If not, maybe in the morning, but I know they're either tonight or tomorrow morning. After the market tonight. So be aware of that. Neutral company. If you're a volatility trader, there might be a play there on Adobe heading into the Fed and kind of really, really tight to a range here, 277. Very liquid, $200 billion company. Obviously one to keep note of. What is the MMM on this one, by the way? Give me a quick peek.
10 off 270.
3.5%.
3.5.
Yeah.
Pretty standard for a nice little $200 billion blue chip company.
Yeah. I might price some stuff out after the halftime report. I always do my volatility trading just before the bell, last hour of the day, things like that. Just kind of the way that I approach my given day in my routine. I do delta and day trading in the morning, then theta stuff, then volatility.
Well, I am going to be a bearer of bad news. It's going to be a good market maker move.
You think it's going to be right in line?
Based on historicals, yeah. Maybe slightly under.
Looks like they are efficiently pricing that one. There's still maybe a play in there.
Maybe an edge on a Condor.
Something like that.
Yeah, Condor, Devicon.
RTY. Quick look at RTY. There's not much there in terms of new information. In fact, still neutral. 1% up is about in line with what the S&P was doing, but the rest of the market's showing strength. Leadership at the top with the large caps, mega caps, and different areas of the market. Russell 2000 in the middle. Matt, anything to add to that one?
No.
Yeah, let's go on to the dollar. We did already talk about currencies so much. Euro dollar cross pair is one we do got to look at. Start with the index. Give me a quick analysis of this one.
There's no analysis here, Tim, and here's why. In the next 2 days, you have 3 central banks announcing monetary policy. There's no swing trade. There's no position trade. There's no carry trade. There is a wait and see to what the banks do. And it's going to be very important. It's going to be very volatile, and it's going to be an absolutely amazing, fun trading environment. And the only question I have is, do I trust the internet connection on the Delta flight I have to Philadelphia tomorrow?
No.
No.
Wait, hold on. I won't trade the initial movement, but what about the secondary movement when it's a little slower?
No.
Maybe,
but you know what? I would trust more than that.
Maybe
after the initial movement.
That sounds like a Dumb and Dumber.
I don't trade on the plane.
So you're telling me there's a chance?
You're telling me there's a chance.
I'm not going to trade on a plane. That's just me personally. I'm going to turn the phone off and not even get onto the Wi-Fi. So
I do it.
Oh yeah, I've traded on the plane for not currencies, but I've traded on the plane.
No, I won't do any aggressive day trading, but I'd place a swing trade on a plane by.
Yeah.
Care about that.
Look at the euro dollar cross pair if you would. And let's talk about this one. Obviously, you've got news-based trades here in front of us, Matt. I want to talk about the big picture though. With the European, markets and Draghi with what he said, I would have expected more selling, but obviously they're holding the dollar up in the anticipation the Fed's going to do what it's going to do.
Well, yeah, I mean, yeah, Draghi comes out today and says, "Hey, I'm the dove, right? I'm the magpie. I'm the vulture. I
Mhm.
own that T-shirt." And then Jay Powell's going to come out tomorrow and say, "No, you're not. I'm the dove." And then the Bank of London, Looney from the Bank of London, is going to be like, "What are you guys talking about? I'm the dove." And
Mhm.
it's going to be a very volatile environment in the currency market in the next 2 days.
Yeah, I think so. Once we get some clarity, maybe we can catch a trend here. But until we get through this news, I don't see anything there until then. Crude oil, give me a look at this one. Little mini W developing into a range here on the bottom. It's up 3.79%. This reminds me so much of when it was at the bottom back in the fall, Matt. In fact, started to develop into a very, very tight range. We're going between 51 and 55 here over and over and over again. It's got to break out one way or the other for me. I know you've got a falling 20. You're underneath the 50 by a long shot, but you've got support down here. What's your take on crude oil?
Neutral right now with the movement we had today. I mean, the probability to the downside with the break of 51, we talked about that yesterday, never really gave us that break of 51, and now it's in some degree of neutrality. I still think you got to have a bearish rating on it to some degree, maybe a negative 40, given the fact that the previous trend is bearish. But you're starting to see a little bit of short-term W formations where you got the double bottom, double top there at about 50. Give it about what, 54 and a half by 55, 51 by 50. If you're concerned about the 50 significant whole number, but this is easy at this point. Neutrality, you wait for breaks.
Mm-hmm. Yeah, I think so. K trade setups potentially here as we're moving forward because in a neutral situation like this, you just got to get confirmation one way or the other. Go moving on to the metals market. Gold is up, silver's up, platinum's up, copper's up, and palladium. They are all up here today on a day, even where the dollar is up just a very, very tiny hair, Matt. Gold breaking above a resistance point up here. Does that trigger above that 1350 on the intraday? What's your take on that?
I know a way we can make everybody happy. Let's just price gold in euros from now on.
Well,
And then
you
every
can't.
and then every time the euro goes down, our gold positions go up even more. You're looking at the very similar analysis that we had yesterday, Tim. A close above 350. 350 to me is what is needed here. You can't get it on the test. The test, we've seen it get kicked back down underneath that 1350 handle. Let's wait to see what happens with the dollar tomorrow when they remove the patience language. Gold should go up, but wait to be cautious here. Wait
Mhm.
for a trigger. And definitely, if you're not into anything or whatnot, you got to wait till post Fed at this point.
Yeah, I would agree with all of those statements. In my opinion, you do have to wait post Fed. Silver, though, is grabbing my attention, Matt, not just gold right now. And I do like some of the reversal characteristics here. You've put in some higher prices and you're rolling those moving averages over. Little MA crossover and a break above that resistance, Matt, in my opinion, is tradable on a reversal signal. Aggressive on reversals, obviously, but there's a reason why we use many different patterns. What would that trigger be for you? I think about 1520 is what I would
Uh,
identify.
Give me a close above 15, and then you probably have to get above these highs right here, T.
Mm-hmm.
So, I mean, if you're worried about that tick at 1515, I understand it. I mean, let's see, there's about an hour of evidence up there. So I do understand that. That's just not one tick. Coincide with this tick right here at about 1511. So yeah, give me a close above 15 and then trigger above those highs.
And then
Silver can
last,
catch up, by the way, to gold. I
silver
mean,
can.
the GS ratio right now is, what is it, 15 divided by, yeah, it's about 80 to 1 right now, bro. I
It's
mean,
really
that's
high.
very high. And a lot of times when the ratio gets so high, a lot of traders, a lot of investors, they like doing silver more than gold because of the ratio. What that means is when that next commodity boom happens, circa 2008, 9, 10, coming into 11, silver goes up higher than gold. If you
Mm-hmm.
remember, gold went to from like, what was it? Oh man, I got to get this right because it's important. Gold at that point, let's go back in time real quick, T. I want to see something.
While you look that up, I'll give you some data on the gold silver ratio. By the way, this is a number that many people track in the chat. Just type in gold silver ratio. If it's the first time you've ever heard of it, make a note of this. Especially metals investors, they watch the relationship between gold and silver. Matt, it hit 90 last night overnight. That's the highest level since 1993.
It's absolutely massive right now.
Yeah.
Oh man, look at that. Look at that. Nice potential breakout scenarios right there though on gold.
Right at 1400.
In the last commodity boom coming out of 08, 09, 2010, 11, before they raised margin requirements in August of 11, gold did really, really well in that environment, went up about 150%. When you're looking at silver, when that next commodity boom happens though, in that exact same time frame, silver went from 8 to 49, right about 500%. It acted more like Bitcoin than it did anything else. So that's what you're seeing here. When silver makes that run, that GS ratio contracts real fast. And so at the very top of 11, that GS ratio got into that 30 to 1 because silver just goes up so much more when those commodity booms happen than gold. And so that's why a lot of people are like, yeah, I'd love gold. It's the shiny metal. It's the safe haven. It's the one that is the protection against all things inflation. But when you understand the GS ratio, you understand in those commodity booms, and they happen the same way markets go up and down, silver goes up a little faster than gold. And so, looking at the characteristics of silver right now, I like gold a little bit more than I do silver, but I also am fully aware that silver can fly.
Mm-hmm. Quick look at Bitcoin. I told you when I bought the breakout, I probably put the top in Bitcoin. I was half joking, but I still traded it anyway.
You're so close to getting stopped out.
I am literally within $70 of being stopped. By the way, the futures
I can't
price
decide if I want you to be stopped out or not.
I know exactly what you want.
I don't.
I knew to pop in because I knew Tim was going to talk about Bitcoin. I had perfect timing. I had a Bitcoin radar on.
Yeah. Don't get me wrong. I want you to make some money, bro. But yeah.
Dollar up, Bitcoin down. It is not looking good right now. Red candle at the top. I'm within just a hair of being stopped out. Even if you put in another 15 minutes of price, the way the last 15 minutes works, I will be stopped out of this one. So it's going to be an interesting one. You play stops for a reason. You take trades, take a lot of trades.
If that goes under 9,000, you're getting stopped out in 30 seconds.
Well, the futures price is different than the BTC USD cross pair, by the way. This one's pricing at 90.15. My trade's actually at 89.60 right now. So it's actually, this is a little bit higher, like a lot of futures contracts, than the actual current spot price. Yeah.
Gotcha.
All right. And then one thing I did want to do today, Matt, is take a look at Honeywell and talk about an intraday concept about pulling back after a breakout. On Delta Tuesday, we talk about some directional concept at all times. And this is a beautiful trigger up here at the high price. It's breaking out. You had that trigger point. It ran early on in the morning, and now we're fading back down. Do a quick, just a couple minutes, Matt, on intraday analysis.
This is a technique, hashtag team tackle, that basically people utilize on breakouts. When you miss the breakout and you're looking to get back in and you want to get in aggressively and you're not waiting for actual confirmation. So when you see the breakout of the old resistance channels, you're looking at the high base here. Honeywell gets above that breakout channel right there at about 174.5 by 175. Now, if you miss that breakout on the actual break, you want to look at this from an intraday perspective, and you want to identify that retracement coming back down into that breakout channel. And so as you can see on the 30-minute chart, it's starting to come down, 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 down. And when I see that slowing momentum type candle coming back down into my support level, I'll actually start dropping it down into a lower time frame so I can get a little cleaner picture on the intraday analysis. And now, as you can see, I have a clear area of resistance intraday right there at about 175.65. So a trigger above that would be okay, but we're still forming the retracement. We don't know exactly where it's going to form. So when I do see that slowing momentum, I'll drop it down into a 5-minute chart to give me a little cleaner picture. I never drop it down into a 1 minute or a 2 minute chart when I'm doing this, but you lower the time frame to get a little clearer picture on the analysis. And as you can see, when I dropped it down in a 5 minute chart, you start seeing it come down a little bit more. So basically, the only thing we're doing on this one, if you understand the 1, 2, 3 pattern from a trader's perspective, you're looking at the breakout as 1, it gets overextended 2, it retraces 3. And so from a swing trading perspective in the step system, the breakout is your first trade, overextended is where you take in profit, and then the retracement is where you're making where you're looking to make that third trade. Well, the same concept applies when you're looking at this from an intraday perspective. You see the breakout, it gets overextended. Now it's forming the nice little bullish retracement, and that's where we're looking to pick it up on an aggressive entry after a breakout, trying to catch that retracement. And then you simply update your triggers. And for me on Honeywell, that trigger would be have to get back up above that intraday resistance right there. But if it comes all the way down, you're going to see a different trigger down here. So keep that in mind. You have, and it's not just on Honeywell, Tim. I mean, I can't believe we haven't talked about Snapchat today. Snapchat, big breakout on a big upgrade today. So Snapchat breaks out on an upgrade. I can't remember what bank upgraded it. The second thing you could do from the intraday perspective is, and you saw this on Boeing and you saw this on Snapchat, is when it breaks out, it gets overextended, but it doesn't retrace. It actually forms a little bit of a high base scenario, breaks out of that high base right there, and then it's off to the running. Very similar to that was Boeing, and we already looked at Boeing today from that perspective as well. When you see that little bit of a short-term consolidation, it then breaks out, indicating it wants to run again. So when you're looking at it from an intraday perspective, it's very similar to the daily chart. You're using the exact same form of analysis. You just drop it into a 30-minute chart and then use a 30, 15, 5-minute chart to make the trade.
You know, and it's such an important part of the step system, Matt, learning how to use intraday charts and different patterns to find trigger points, stop loss, target, entry, and position sizing, obviously.
I would say in the step system, the most important time frame on the chart is the daily chart. That's number one, obviously. But then it would be the 30-minute chart.
Yeah, I would agree with that. Mark, I did hear you coming on in here. Welcome, my friend and brother.
No, I just wanted to come in and promote two things. You're talking about the step system. We're going to be talking to pro members tonight at Tackle Trading. We're going to be talking about the step system. Module 2, Coach Gino Poor and Grant Larson will be going over the step system Module 2 in the Coaches Show tonight. And we just released another episode of the Trading Justice podcast. So go to tradingjustice.com or go to your favorite download, iTunes or whatever. Trading Justice episode 326, and then Step System tonight on the Coaches Show.
Trading Justice 326, we talked about the Iron Condor strategy. We also played a couple games there as well. The newsletter is coming out, I believe, today as well. So the June edition of the newsletter is coming out. And as well, we've talked about, guys, Module 3 of the STEP system was released this week. That is the bullish retracement. So make sure that is your homework assignments between now and next Tuesday. And obviously, tonight we're going to be going over Module 2 in the live coaches show at 6:30 Mountain Time, 8:30 Eastern as well. Very quickly, Oracle got a downgrade today. I don't care about it, but I might care about this one, Tim. Pinterest got a upgrade today. Perhaps a little bit of a breakout type candidate, and it's a company I do like. I like Pinterest.
You know, I've been running the wheel on this since post earnings and that boomerang trade where I've been doing naked puts, but I haven't been assigned yet. You know, sometimes when you do that naked put, you just get that cash flow and you don't have to take delivery. I like the company. I've been targeting it. I obviously don't play the IPOs, but after an earnings and you got a couple months of data, I do like this stock. And if you're willing to take delivery at $25, Matt, I mean, that's what, a 12% return?
That's a good naked put. If you want to own Pinterest at $25 or $24, you got premium there to get a real good cash flow on the way to getting into the stock. But I mean, that's boomerang 101. You sell naked put. Mark talked about it in the podcast yesterday. You sell put option on something that you want to own, and you get paid money to do it. And that's the start of the boomerang trade where you're looking to do covered calls on it. So I could see Pinterest being on one of the Tackle 25s next year, Tim.
Dirty, sexy money candidate.
Mostly dirty. It doesn't have the fundamentals to be on the Tackle 25, but dirty DSM list.
Yeah.
Oh It could
I
be
do
it
like it.
definitely DSM Canada.
Guys, thank you for joining us here. Tackle Trading's halftime report. Before you bounce out, give us that quick thumbs up and
Hang
let
on,
us
I got to
know.
do my announcement because
Let's
I
do it.
got one that was given to me as my homework. Over on Instagram, make sure you guys get over there. We have a poll coming out. Jess is putting on there. Take a vote for which stock you'd like us to analyze. It would be between Hershey's, Gap, or Foot Locker. So get over to Instagram.
So
and
we got HSY.
Mhm.
Okay. Solid bullish uptrend with a solid high base. We have what was the other one?
Foot Locker.
What's Foot Locker? FL? Yeah.
Yep.
Foot Locker, bearish retracement, a little flag pattern on the bearish side. And the last one?
Gap.
GPS.
GPS.
Yep.
And Gap, just a failed retail company. Okay. I like it.
So get over to Instagram and vote on those guys, and we will have one of the coaches analyze.
We don't want to hear Jess's wrath on us later on today. Let's. She owns our Instagram, and she takes great pride in the Instagram. And if you like all the creative stuff we put out there at Tackle Guys, a lot of that is Christian and Jessica. So let's go support Jessica and what she's trying to do on Instagram.
100%. All right, guys. Great job today, Matt. Great job today, Cody.
Great job by you.
I always enjoy being here. Matt, are you gone tomorrow? Is that right?
I'm on a plane, bro.
You're on a plane. That's right. Trading that announcement. We're going to have, I believe, Coach Gino, Coach Mark.
That announcement. Are you kidding me? That'd be crazy.
I know. Coach Gino, Coach Mark, and Coach Noah are going to be filling in each day, one day through the rest of the week. We're going to have a lot of fun. Cody, we'll see you tomorrow. Everybody else, we're out.